Hi, thanks so much for tuning in to BQ Prime's Stocks in Focus. As the name suggests, this conversation helps you understand the stocks that are buzzing in trade, the individual names, or in fact, the groups. Today, we've got TCS, we've got Bharti Airtel, we've got cement stocks, and we'll also talk about the banking pack, which is currently reacting in trade. I've got Avinash Gorakshakar with me. Avinash, thank you so much for taking the time and good morning to you. Let's start with TCS. And the big update, of course, is the win of the £600 million deal, which amounts to about $723 million. In the larger scheme of things, of course, not a very, very large deal, but I think sentimentally positive because there were questions about new deal wins. How do you rate this particular order, and how do you rate TCS within the larger pack?
Yeah. Good morning, Alex. I think clearly this deal win is not a very large one, but actually, does instill a lot of confidence on the TCS management. And my sense is, Alex, whatever the negativity in the markets as far as the headwinds from the European as well as the US markets is concerned, is more or less factored into the price. I think the markets would obviously look at the Jan to March quarter kind of commentary, the kind of deal wins in this quarter, because typically December quarter is a holiday quarter. The Jan to March quarter is a beginning of the IT spend cycle. So definitely I think things are looking up, and I think hopefully in the second half of FY24 we could see things getting better. So I think to that extent, I think TCS is definitely looking attractive from a longer term point of view. Has a lot of cash on the books, has a very decent kind of free cash flow, and most importantly, even if you have observed the quarter three commentary, the management was very hopeful that margins would be retained and deal wins would come through. So I think in all, I think it's a hold from my side. Any opportunity to buy would obviously be more better if we wait for the March quarter results, after which I think we could get a better sense on the kind of growth numbers for the coming financial year.
To talk a little bit more about some of the metrics beyond, of course, deal wins is that attrition picture, which is really the detrimental factor that I think a lot of people have been focusing on over the last few quarters. It did remain elevated in the quarter gone by as well, but initial signs saying that that might be settling down. Would you be looking at that very closely in the last quarter of the year?
Yeah, definitely, Alex. I think already, there is a clear, signal that, this kind of number is going to come down drastically. And I think this is very clear from the fact that, IT salaries have now normalized. We are seeing that, a lot of good, talented, kind of people are available at very remunerative rates. So I think going forward, I would not be surprised that you could see better numbers for attrition coming in the next, say, couple of quarters. And I think that could also give a little bit of confidence to the market, because this was one number, as you rightly pointed out, a little bit of concerning factor for a company like TCS, which actually the management tried to defend, but unfortunately it remained elevated. So maybe the next couple of quarters things could get better, and I think that would also give little bit of sentimental booster to the stock.
So, and then finally, to close out on TCS, when you compare it with its large cap peers, or you think about opportunities in the mid cap space, given the kind of environment that we're in, the possibility of recession in the US, though we're talking on a day when they've won an order, and a decent order at that, a lot of people questioning whether now is the time to go full tilt into TCS or the likes of Infosys, or even maybe a mid-cap IT company, or would you actually wait for a bit before you take that bet? What's your opinion, and which would you pick? Would you pick TCS, or would you move towards the mid-cap counter?
No, I think my sense is, Alex, I would prefer to wait for the March end quarter to come out and get little more clarity, because as of now on the ground nothing has changed, and I think Europe is in a severe kind of a problem. US is slowly picking up. In fact, yesterday's numbers by the US governor have been pretty positive. So I think clearly some improvement could come in the US market, but I think probably after the June quarter things could get a little clearer, and I think at that point of time, with better visibility, I think one could look at definitely companies like TCS, Infosys, and within the smaller names we continue to like companies like KPIT Tech, which has got a vertical strength in the automotive and the electric vehicle space. So I think it's a pick and choose kind of strategy. Maybe the entire IT pack may not look attractive, but I think these are 2-3 companies which look worthwhile at the current levels from a medium to long term horizon.
Okay, moving from a stock that is outperforming in trade today to a stock that is underperforming, though from what I can look at it, Avinash, Bharti Airtel is off the low point of the day. It's now trading with cuts of about 1.3%. This is, of course, on the back of its earnings. And correct me if I'm wrong, but uh, net profit figure, not as much of a factor, more so with regard to the ARPU miss, which has come in around 192. I think the expectation was closer to 200, and the expectation of the impact of higher capex. What's your rating on the stock right now, and how did you look at the earnings?
See, I think, Alex, if you look at the ARPU number, it came slightly above 2% at 193 rupees. Of course, the expectation was around 200 rupees. So there was a little bit of disappointment on that front. But if you see the net customer additions in the third quarter, that was quite impressive, 4.6 million. Plus, the other businesses have done well. And I think, the markets probably were looking for something more aggressive on the ARPU side. My sense is that given the kind of competitive scenario which we are and the expected 5G rollout, I would believe that this weakness should be used as an opportunity to accumulate Bharti Airtel. Definitely, I expect the Jan to March quarter to be a much robust quarter, and the coming financial year should be better because as a 5G rolls out, you're going to see the ARPU number, the blended ARPU number getting better. So my sense is, we are positive on the stock. We believe that, from a long-term perspective, at least from the next 12 to 15-month horizon, this could be a good time to, chip in and accumulate this stock because clearly the competitive intensity has reduced, and I think the pricing power has come back to the industry. So to that extent, despite a slightly disappointing, quarter in terms of ARPU, we look forward for better numbers in the coming quarters.
Is debt going to be a bit of an issue, though? And obviously, you're talking about significant capex on the 5G rollout as well. Is that a factor to watch very closely?
I don't think that would be a major factor, Alex. Of course, debt is definitely going to be a large component in their capex program. But given the kind of cash flows which Bharti currently generates and which is expected, from the 5G rollout, I would believe that the best part for the telecom sector is that the competitive intensity has now reduced considerably. And if you look at the three players, Bharti as well as Jio are the most stronger ones, while Oda is virtually a dying business. So to that extent, I think servicing the incremental debt would not be a problem. Yes, in the near term, it could bring down the return on capital employed, but over the longer term, I think they could easily service the debt and actually generate a recent kind of cash flow.
Okay, on to the next group of stocks, and again, buzzing in trade today, cement stocks. And this is because of a statement that the finance minister made at a CII conference, if I'm not mistaken, yesterday, where she said that the Fitment Committee would consider lowering the GST on cement companies, and that GST, in fact, stands at the highest rate, which is 28%. So any reduction would be a significant benefit. How beneficial, according to you, would be for the earnings of the frontline companies, and how should you look at the cement pack? What's your favorite?
Yeah, I think as far as the cement pack is concerned, quarter three has not been great. In fact, if you look at players like Ultratech, even companies like Ambuja Cement, which had a very good performance in terms of the operating EBITDA. But I think overall input costs had gone up significantly and prices had not moved up. So the margin pressure was considerably visible for most of the cement companies in quarter three. Now coming to the excise duty reduction, if at all 28% is reduced drastically, that would definitely be a booster for cement, consumption, because obviously that would be passed on to customers. My sense is that, with the infrastructure outlay of almost 10 lakh crores in the current budget, cement is the first building block, Alex, and I think that is definitely going to benefit these companies. So obviously FY24 looks to be a lot better. If the government pursues a lot of infrastructure projects, cement is going to be consumed in a pretty large amount, and that would definitely benefit the larger players like Ambuja Cements, Ultratech. Some south-based players which we like are Ramco as well as Heidelberg Cement. So I think my sense is that probably the market is getting a clue that maybe in the next couple of months or maybe in the very near term, if excise duty is cut, that would actually spur a lot of demand consumption in the fourth quarter as well as in the coming financial year. So I think one has to be a little patient. But yes, even otherwise, cement is going to be a sector which is going to be significantly outperforming over the next, say, 12 to 18 months.
Now, outside of fundamentals, there are a couple of stocks in the space that have gotten or seen corrections in the recent past. And taking that into account, when you look at the cement pack as a whole, what, according to you, is a good accumulation point right now, and which stock would you suggest?
No, I think my sense is that Ambuja Cements, has been beaten down quite significantly. So Ambuja Cements, considering the kind of geographical reach, the kind of capacity it has, and the kind of prices it commands in its, dominant kind of market, would definitely be a very good stock to accumulate. My sense is, see, if you leave alone the controversies as far as the, beating down of the stock had concerned, the fundamentals of this company continue to be very strong. So I would believe my first choice would be Ambuja Cements, and obviously the second choice will be Ultratech Cement because it has a pan India presence. It's got a large capacity, and obviously any incremental kind of pricing power which comes in would obviously benefit. So I think these two stocks should be there in your portfolio, Alex. But from a longer term perspective, because the big positive is if at all costs do come down and the excise duty is reduced, then that will give a big fillip to the cement consumption. And I think cement is definitely going to see strong double-digit growth in the next financial year.
Okay. And market leadership is certainly something to bear in mind with regard to the cement space. As a bonus, I would like to also ask you about your view on Bank Nifty because, and I'm not looking at the latest number, but it did see a falling off. It was in the positive. And then after the monetary policy announcement, where I think the Reserve Bank of India gave his outlook for FY24 CPI, which is pegged at 5.3%. And that is maybe a little bit higher than the street had anticipated and maybe could have implications for monetary policy and therefore interest rates. So what's your view on the banking space and how should one look at banking counters right now?
No, I think the inflation outlook definitely sounded a lot of caution from the governor's side in the current economic policy, RBI policy. But I think clearly the view looks to be extremely conservative and typically more bookish, because my sense is that inflation in the near term, at least in the next say 3 to 6 months, is going to come down. To that extent, Alex, my sense is banking is one area where the growth numbers are going to be extremely strong. The credit growth could easily average about 14-15% for the next say 2 to 3 quarters. And if you look at corporate capex growth, you look at the retail book of most of the banks, they're growing exceedingly well, and this is across private sector banks as well as the PSU banks. So my sense is that this is again another good time to accumulate the larger banks. From the PSU side, something like an SBI, Bank of Baroda, Canara Bank, and of course from the private sector bank, well managed banks like ICICI and Axis, I definitely would qualify to be, one should look at buying these stocks to get a decent alpha over the next, say, 12 to 15 months. The Bank Nifty typically is very volatile. So, it's difficult to take a call on a day-to-day basis. But over the longer term, I think over the next, say, 3 to 4 quarters, banking would continue to, show a decent run on the numbers, especially on the asset quality and on the loan book side.
It's interesting that you say that because the governor, along with the other statements that he made, was talking about private investments going up as well as signs of capex picking up. And also in the same breath, he talked about non-farm credit growing quite significantly till I believe November or December of this year, or of last year rather. And I do want to ask though, there are some murmurs about Kotak Mahindra Bank and a possible next acquisition. They have been acquisitive in the past, but it's been a while since they have. What's your view specifically on Kotak Mahindra Bank?
No, I think if you see the performance of the bank in the third quarter, Alex, I think very strong numbers. And I think NIMs have been at record highs. So I think that gives a clear indication that the bank is going from strength to strength. As far as their acquisition plans are concerned, Kotak Bank has been one of the most aggressive kind of buyers. ING Vaishya Bank was their last acquisition. And I think going forward, obviously they have on their radar, obviously market reports suggest that, IDBI Bank is on their radar. So if that at all happens, then I think it's going to be a big positive for them, because not only do they get large penetration in the domestic market, but obviously there would be a lot of synergies if this merger or if this takeover comes through. So I think it's a matter of time, but I think when it happens, at what valuation it happens, I think these are things which the market will have to wait. But definitely if it does happen, it definitely would further re-rate the Kotak stock.
But then just to conclude, you would still say SBI and the names that you suggested in the PSU banking pack, ICICI Axis from the private pack.
Yeah, I think because the risk reward definitely looks better. I think PSU banks still trade at a significant discount to the private sector banks. And I think if you look at the kind of quality of assets and the profile of growth for these PSU banks, you'll be surprised that even the smaller banks have now shown very strong numbers. So I think I would be more comfortable to remain with the larger banks, considering their larger balance sheets and their larger, geographical mix of business.
Absolutely. Well, Avinash, always a pleasure speaking with you. Thank you so much for taking the time.